Stocks are in absolute turmoil right now. The 2023 rally has absolutely hit a wall. August has been nasty. Apple earnings being a disappointment.
Sometimes the apple does fall far from the tree.
AI stocks have been flying and then they've come crashing down.
It was fun while it lasted.
The S&P 500 is down about 5% from its high, and the NASDAQ is down almost 8%.
Not great, if I'm honest.
But regardless of how the broader market is doing, I believe there are 5 stocks right now that are great buying opportunities for the long term. So if you like this type of content, make sure to subscribe and let's get into it. Hey, my name is Chris, VP of Marketing at Stock Dads, and one of our exclusive analysts. I focus on swing trading and long-term investments, and it's very key right now that you want to focus on your trading or investing plan. Don't panic buy or panic sell.
Sure, stranger. That's easy for you to say.
There's still a lot of ongoing concerns about whether there's a recession in 2023, 24, or just recession is canceled, inflation, Fed. There's a lot of noise going on right now. But I do a lot of due diligence into the fundamentals of these companies. We preach education first in our Stock Dads Discord group, where we teach people how to trade and invest. And with these 5 stocks, I'm convinced that they offer great long-term potential here, anywhere from 30% upside to even 100% upside in the coming months and years.
I don't want to cock block anybody, but love to show you those numbers.
I'm excited to show you guys stock number 1. It is ALB stock, Albemarle. This is the only US producer of lithium out there, and in fact it's the largest lithium producer in the entire world. There's a lot of potential here as lithium is a critical element that will be used in electric vehicle batteries for years and years to come. And right now it's a really hot market out there, and it's going to be even hotter. EV sales have been growing at a rate of about 40% in 2023, and this is going to continue over the next several years as electric vehicles get a greater market share of the overall automobiles sold. Over the past couple of years, lithium prices have skyrocketed. All the research points to the demand for lithium being way higher, outpacing the supply of lithium. Those dynamics being the same, price should gradually increase over time. Obviously, people are worried about recession and whether people are going to continue to buy new cars, but I think that those fears are overblown and you need to look at the long-term trend. On ALB's part, they believe that they're going to be able to increase production by 20 to 30% year after year for the next several years. And they are acquiring more stakes in the lithium mines. So I think they're in a really good position, a pole position, to capitalize on the electrification of our society. They reported a good earnings report that was ignored by Wall Street of 60% revenue growth and over 100% net income growth. These are phenomenal numbers. They even raised their profit forecast for the rest of the year. The company is so profitable, trades at a P/E ratio of 5, which is way below market average right now and below historical average too for this stock, right? Only 5 times trailing earnings. And we expect those earnings to grow. So the more Wall Street continues to ignore the stock, the cheaper it gets. And as they continue to pile up cash, they're going to be able to pay a higher dividend and also do share buybacks. That's definitely on top of management's mind as they make sure to return shareholder value. So if you do want to take opportunity to get in on this stock at a basement price, in my opinion, ALB, right? It's also a materials company if you happen to need that for your portfolio.
Really? That sounds pretty good.
Number 2 is AMD stock, Advanced Micro Devices. This is a semiconductor company, and I believe this stock is a sleeping giant that could have huge potential in the next 6 to 12 months. AMD sells chips that are used for many different applications, PCs, gaming, data center, auto. It's a very diversified business. So AMD reported earnings recently. They had $5.4 billion of revenue. It was actually down 20% year over year. And as far as PC sales go, they were actually down 50%. But they've said on their earnings call that they believe this is the bottom for PC sales and they expect growth in the next quarter. Intel, for instance, one of their competitors, also said the same thing on their earnings call, that they expect chips selling into PCs to grow over the next year. So I'm pretty confident in this trend. I think it's a great opportunity to buy right now while it's low and while investor confidence has been really not too good for this stock. And it's a great opportunity to get in when things go up again. However, the real catalyst is going to be in Q4 this year, just a couple of months away, when AMD starts to roll out its AI super chip to compete with NVIDIA. Right now, it seems like demand for these AI chips is extremely high, and it's only restrained by the amount of supply available. Once AMD comes out with theirs, I think they will have a big boost to sales and profitability. They already announced in the past quarter that client interest in AI chips have gone up over 7-fold. And based on the demand here, I see AMD making a ton of money. Given the expected increase in profitability, I do believe now is a great time to buy AMD. The analyst price targets here sit at around $145 per share, and currently the forward PE sits in the 30s. As the stock continues to drop here towards 100, I think it's just a more and more great buying opportunity if you do have the patience to hold for times to come.
This is what patience is. Waiting.
If you're liking these stock picks so far, make sure you stick around till the very end because stock number 5 is going to be one of the best ones you've ever seen. Moving on to number 3 here is Oddity Tech stock, Odd stock. This is a brand new IPO stock, so it's relatively unknown, very untapped potential here. It's been producing some great results, but once again ignored by the street and has actually been going back down towards its IPO price. Now is a great time to get in. Build a small position like I'm doing right now and grow it over time. So Oddity Tech is a very unusual one. Many people don't know that it's actually an artificial intelligence play. They use AI to curate and create new products for beauty and wellness. So this company boasts 40 million users, of which they've collected a lot of data points on that they're able to refine their products and come up with new ones. 40% of their workforce are tech workers, and they have their own biotech lab in Boston as well to come up with those new ingredients for their products. They have 2 different segments of their business, Il Maquillage, which is their makeup business, and Spoiled Child, which is their wellness business, meaning supplements. I bought one myself, collagen product that hopefully will make me look young.
Oh, yeah, well, yeah. Maybe.
Regardless, I'm supporting the business. Hopefully the stock will go up.
But what about the money part?
Unlike a lot of artificial intelligence stocks, this one is actually a profitable company. They've been profitable for a couple of years now, despite being on track for yet another mega growth year. Over the past couple of years, they've been growing at a 100% rate. They raised their forecast for the rest of the year as well. They're very confident in continuing to hit those lofty goals. Before their IPO, they had $100 million in cash and no debt outstanding at all, which is amazing. After IPO, they've managed to raise over $400 million, so they have a huge cash pile right now that they could use to reinvest into the business. We know that as they grow, they do keep in mind profitability, so this is all around a really great company if you want profits as well as growth.
Well, it's an interesting combination of elements, making him a tough little son of a bitch.
But for this one, because it is a new IPO stock, there's always at some point insiders that are going to sell. There's always a lack of a public track record, so to speak. There is a bit of uncertainty, so I would dabble lightly here and then gradually build up that position as we get more and more confidence with financial results that come out.
I have every confidence you will prevail and be rewarded with the high station you so desire.
By the way, I first alerted this stock in our Stock Dads Discord group. This is where you get all of our live trading and investing alerts in real time. There are so many educational resources and you get to bond with a lot of like-minded traders and investors. Check out the link in the description down below. We are going to raise our prices very soon. Make sure you get in right now at that cheaper price. Moving on to stock number 4 is going to be Verizon stock. This is a so-called boring stock, right? Everyone knows Verizon, millions of people use them. They're not exactly a growth company, but I'll tell you why I like them here. It is an amazing dividend opportunity right now. So it does currently have a dividend yield of approximately 8%, which is massive. One of the biggest yields in its history, and you won't find a lot of other stocks on the market like it. Now, obviously with big dividend yields, a lot of people are concerned, right? Big dividend trap. This company is not growing. They're losing market share. It's going bankrupt, right? I don't think that's the case for Verizon at all. I mean, if you look at their past earnings report over the last 6 months, they've produced over $8 billion in free cash flow, and they've paid out $5.5 billion in dividends. So they do have a very healthy cushion as far as cash coming in and cash going out. Now with telecommunications companies, right, Verizon, AT&T, we know that, they're not exactly growing that much. But the whole point here is that with that dividend, also the valuation right now is very, very, very cheap. You're looking at a PE ratio right now somewhere around 6. when historically it's traded at a PE ratio of 11 if you look at the 5-year average.
6? Yeah, 6 is good. Okay.
Right? You look at other metrics like total enterprise value over revenue, and it's also approximately 30% lower than it has historically been. One caveat to this stock is that there is some uncertainty surrounding lead contamination with its cables. There was a big Wall Street Journal report there. We don't know exactly what the financial implications will be, but thus far, according to analysts as well as news reports, it doesn't seem like Verizon is going to have that much liability here. So if you are a big fan of passive income, I think right now you're getting in at a good basement level price for Verizon stock. And actually over the past month, while the market has been slightly tanking here, Verizon is actually up about 5%. So people do see some value in defensives here. And this is the one stock in my portfolio that I am comfortable with holding, being a value stock and a dividend stock.
You make the money work for you rather than you working for the money?
And stock number 5, you know I saved the best for last. This is the most undervalued stock on this list, and it is PERI stock, PERI Network. This is a $1.5 billion ad technology company. It is a growth stock because it has been growing revenue by over 20% year after year over the past couple of years. And with their net income growth, it's been anywhere from 50% to 100% in recent years. And even in the past quarter, they had great results. They even raised their guidance by about 5% for the rest of this year. PERI's business is divided into search advertising as well as display advertising. Display being ones that you can find on videos as well as connected TV. Think of like Roku and the QR code ads where you can just scan the code and it takes you immediately to check out on a page. So that is very useful for a lot of retailers. They've partnered with Beyond Meat, Walmart, Albertsons, and they've recently won an award for their great work as well. For the search side of the business, they are partnered with Microsoft Bing, another massive client to have. And we know that with Microsoft Bing, there is a lot of focus going in there right now with their integration with ChatGPT and hopefully getting more market share away from Google. Any percentage increase in market share for Microsoft with the search business is going to result in billions of dollars for them. And they do have a profit share with PERI. In recent years, digital advertising has been growing at a rate of over 10% per year. So that is a total addressable market that is continuing to grow, and PERI's growth actually outpaces that. Their compound annual growth rate for revenue over the past 2 or 3 years is over 30%. Even this year, where there are continuing concerns because of a possible recession, they've still managed to grow very handsomely. A 20% growth rate in the past quarter. They've actually been accelerating in that growth rate. And also for their adjusted EBITDA, which is a great measure for profitability, they increased that by 45% in the last quarter. This is an already very profitable company with a fast growth rate. Their PE ratio is only about 15 here as of this recording, which is dirt cheap compared to other companies in this sector, as well as the overall market. This has been a profitable company for many, many years, and they continue to execute flawlessly. And after the solid earnings results of last quarter, they also raised their forecast for the rest of 2023. So I'm very optimistic that they can actually continue to beat those revenue and earnings targets. They've been consistently beating those estimates every single quarter pretty much, and year after year. You can look at the history of how they've been doing, how they operate. They set the bar low and they beat those estimates time and time again. In addition to the strong earnings as well as the solid valuation, they also have an incredible balance sheet. They have over $480 million in net cash and no debt. This is a very lean machine, and with all of that cash, they're in a really great position to potentially acquire other companies. They've done that in the past. They look for profitable companies that can immediately add to the bottom line or add new technology and new avenues for their business to expand. With that huge fortress balance sheet, really if you're buying into this company, it's already a cheap valuation, but the fact that almost 1/3 of the whole company's valuation is cash on their balance sheet means that the true market valuation of this company is actually even lower than what it appears to be right now. So it's kind of a extremely low risk investment in my personal opinion. It's the largest stock I own in my personal portfolio. You're getting a tech stock that is very cheap with a lot of growth ahead of it, and the management team has continued to execute every single time, never been disappointed. So I continue to hold it, even if it continues to experience a dip here with the overall market. I'm definitely a buyer. So there you guys have it. Those are 5 stocks that I'm buying right now, gems that I believe will shine If you've enjoyed this video, make sure to give this video a like, subscribe to the channel if you haven't already. Check out the link in the description for the Stock Dads Discord group. I hope to see you in there, and I will see you in our next YouTube video.
If you're ready, I'm ready. Let's make some money.